So the first thing that we did in this chapter, guys, material control, was talking about the importance of material control. I said for any manufacturing concern as such, guys, material would be a significant component of the total cost of the finished product. Because it is a significant component of the total cost of the product as such, guys, you would be needing the exact amount as such beta for determining what? The price of the finished product. If you do not procure raw material as such, guys, at a lower cost, the cost of the finished product is going to increase. That in turn beta will increase the price of the product. Also, the quality of the product as such, guys, majorly would depend on the type of raw material that is being used. So for both quality as well as price as such, guys, raw material, exercising control over raw material is very important. And then because the amount, because guys, raw material is a component that is required, you have to ensure as such, guys, that sufficient orders are placed as such, guys, at the right time, so that raw materials are always available for the purpose of production. If there is non-availability of raw material as such, guys, that would also mean that we will not be able to produce. So for production continuity as such, guys, again, raw material, proper availability of raw material is required. At the same time, we should not have excess stocks of material. In case you maintain very high amount of raw materials as such, guys, the amount of investment required would be high. The amount of storage space that is required also would be high. This will result in a higher amount of stock holding cost and can also result in a higher amount of wastages. There can be risk or loss on account of obsolescence also. You end up procuring a very high quantity of material and then you realize that you do not need the materials at all as such beta. So that is why as such, guys, you should be maintaining the right quantity of material. It should not be lesser amount, it should not be a higher amount. That is where beta we have learned about all the inventory control techniques. That is how you will determine what should be the optimum level of inventory to be maintained. And after that as such, guys, I also spoke about the last point. Kya tha beta? Materials ke related. हाँ, objectives of cost accounting में नहीं है बेटा अपन. The last point, I knew better that you would answer. The last point of objectives of cost accounting as such, guys, was assisting the management in decision making. How many of you are confusing this with objectives of cost accounting? Okay, let's revise. What are the objectives of cost accounting? Ascertainment of cost, determination of selling price, cost control, cost reduction, and after that, assisting the management in decision making. यहाँ पे क्या था बेटा? Regular information about the quantity of materials. Only if you maintain proper records as such, guys, you will know what is the exact quantity of raw material that is available. Are we clear about this? So that was the first part as such, guys. After this beta, we moved on to material procurement procedure. So before this, I spoke about the different types of departments as such, guys, that an organization can have. There can be production department, purchase department, stores department, engineering or design department, accounts department. So under material procurement procedure as such, guys, we had first one is bill of material. It is a detailed list of all the materials that are required as such, guys, in order to manufacture a product. Why do we need bill of material, guys? For the purpose of procurement planning as well as production planning. The production manager will know what are all the materials that are required, guys. The purchase manager will know what are all the material that needs to be procured. Stores manager can compare bill of material with the existing quantities and see whether additional orders are supposed to be placed or not. So who prepares bill of material? It is generally prepared by the engineering department. They are the ones better who design the product. The next one as such, guys, that we spoke about here was a material. पूरा ही उड़ा दिया मैं. हाँ. After this as such, guys, we spoke about a material requisition note. As and when, guys, the production department needs materials as such, guys, they would be requesting the stores department to release the materials. And that formal request being made to the stores department for release of material, guys, is called as a material requisition note. After that, guys, in case the quantity of materials in the stores department reduces to the level of reorder level, the stores department would be making a formal request to the purchase department for procurement of material, and that requisition note is called as a purchase requisition note. Once the purchase department receives a request for procurement of materials, guys, it will check whether they already have a supplier listed for it, or do they need to, evaluate and identify a supplier. In case the supplier is not readily available or it is not listed for that material, you will send out request for proposals, asking all the interested parties better to submit their proposals. Once you shortlist a supplier as such beta, then comes you placing a purchase order. After that, as beta, when the materials are delivered by the supplier to the factory, you will be preparing goods received note at the factory gate. I said this is prepared in 4 copies as such, guys. After that, as beta, comes releasing payment to the suppliers. Who will release the payment? The accounts department, on the basis of the invoices that are submitted. So this was the entire material procurement procedure. Are we clear about this? After this, as such, guys, I spoke about valuation of material receipts. Under valuation asset, any amount that is directly incurred to bring the material to the present location and condition as such, guys, should be included in the cost of materials. It will include basic purchase price and all other expenses that are directly attributable to acquisition. Okay. Under that, beta, we had different concepts. The first one was discounts, subsidies. If there is discount arising on account of procurement activity, that can either be trade discount or quantity discount. Because it is related to procurement, it is supposed to be reduced from purchase price. Then beta, if the discount is arising on account of payment activity, guys, it is considered to be a financial transaction, financial in nature, and that is why it is not adjusted from the purchase price. Instead, it is transferred to P&L account. If at all there are subsidies or incentives that are received as such, guys, from the government for materials that were procured as such, guys, what are you supposed to do with that subsidies or incentives? Deducted from the cost of the materials. After that, as such, beta, we spoke about duties and taxes. I said any amount of duty as such, guys, or tax which is not refundable, or you cannot claim a credit of that as such, guys, is your cost, and it should be added to the cost of materials consumed. If you can claim credit of the duty or tax paid as such, guys, or you can claim a refund of that amount on a later date, then it should not be forming part of your cost. If they use the word GST, by default the assumption, beta, is that you will be able to claim credit. Because you will be able to claim credit as such, guys, you should not be including it in the cost of your procurement. Alright. If there is road tax mentioned as such, guys, or toll tax mentioned, by default, beta, credit cannot be claimed. If they use the word customs duty, again the assumption is credit cannot be claimed. That is why road tax, toll tax, customs duty should be added to the cost of procurement. GST mein beta, we did a question wherein it was a composition dealer. I said composition scheme you will learn under indirect taxes. For the time being as such, guys, if you are a composition dealer or you are buying your materials from a composition dealer, then the chain stops there. You will not be able to claim credit, and hence it should be added to the cost of materials purchased. After that, beta, we spoke about penalty and charges. I said penalty and charges, guys, are in the nature of abnormal. So that is why as such, guys, you should be transferring them to P&L account. There was demurrage, guys. What's the definition of the word demurrage? This is a penalty that is imposed as such, guys, by the transporter for delay in either loading or unloading. Baki koi bhi fine agar penalty hai beta, you will directly transfer that to P&L account. And then, guys, other expenses. Under this, beta, insurance, commission, and freight inwards. All of them as such, guys, transit insurance hai, not storage insurance. If there is transit insurance, guys, if there is freight and if there is commission, these expenses are directly attributable to procurement, beta, and that is why you will be adding it to the cost of procurement. As far as containers are concerned, I said check if they are returnable or non-returnable. If it's a returnable container, guys, obviously you do not have to, add it to the cost of materials because you do not have to bear the expenditure. If it's a non-returnable container, you should be adding it to the cost of materials. Under returnable container also, you have to check if there is any loss of value. That means the amount that you have paid as deposit and the amount that you are getting back. If there's a difference between these two, then it has to be added to the cost of materials consumed. Non-returnable container mein beta, if the container itself has any scrap value as such, guys, or realizable value, it should be adjusted from the overall cost and only the net cost will be added. After that, beta, we spoke about shortage. I said shortage can be either normal or abnormal in nature. If it is normal shortage, beta, what will you do? Adjust it to the cost of the remaining good units, and if it is abnormal, what will I do? Transfer it to P&L account. After material, this thing, but valuation of materials. So all of this, guys, will basically tell us what is the cost per unit of the raw material, beta, that should be recorded in your books of accounts. Then, beta, we moved on to inventory control. I said there are 4 categories under this. One is by setting quantitative levels and relative classification, ratio analysis, guys, and physical control. Setting quantitative levels matlab beta you will have certain limits fixed. Based on those limits you're indirectly exercising control over the materials. This is where beta we spoke about reorder level. Reorder level is the level of inventory at which an order should be placed. We will have to ensure beta that we have sufficient quantity of raw material available to consume during the lead time. The whole objective of having reorder level beta is that the supplier will not be delivering the material immediately as soon as you place an order as such beta. There can be a time gap. So during that time gap, we should have sufficient quantities of materials available. So I said beta reorder level, in order to protect against all the contingencies, reorder level can be maximum lead time into maximum consumption. But that may result in a higher amount of inventory, higher storage cost, higher investment blocked. So that is why the other formula for reorder level beta is normal lead time into normal consumption plus safety stock or buffer stock. So are we clear, guys? What is the amount of safety stock to be maintained? We have learned separately as such, guys. We'll have to consider what is the amount of stock out cost, what is the amount of carrying cost on safety stock. Then guys, we spoke about reorder quantity. I said this is a quantity that you will be purchasing when you place an order. Every time an order is placed, the quantity that you're buying as such beta will be termed as reorder quantity. There are three factors, guys, that affect your reorder quantity. One is purchase price, one is ordering cost, the third one is carrying cost. Purchase price, purchase price is the price at which you're buying the material. Agar transportation cost is given on a per unit basis, where will that come? Purchase price. Ordering cost is a fixed cost that you incur every time an order is placed, irrespective of the quantity ordered. If you are incurring any cost on a per unit basis, guys, it should form part of your purchase price. So ordering cost is that, and carrying cost as such, guys, is the cost of holding 1 unit of inventory as such, guys, throughout the year. So this will comprise of storage cost, it will comprise of finance cost and storage losses. All the three beta will be included in your carrying cost. Now, in case the company wants to reduce their ordering cost, they should be ordering for a higher quantity. If you order a higher quantity, you will be placing lesser number of orders in a year. That in turn as such beta will reduce your ordering cost. But ordering a higher amount as such, guys, would also mean that you're maintaining higher inventories. Because you're maintaining higher inventories beta, it will increase your... So you will have to strike a balance as such, guys, between ordering cost and carrying cost. This is where we have learned the concept of EOQ. EOQ is that point, guys, at which the sum total of ordering cost and carrying cost is the least. The problem with EOQ beta is that it does not consider quantity discounts. It only takes ordering cost and carrying cost into consideration. So EOQ would work definitely as long as there are no quantity discounts. If there are quantity discounts, we may have to compare what is the total cost with quantity discount, what is the total cost without quantity discount at EOQ. Whichever alternative is better, that will be selected. So this beta, using this graph, I told you beta, the point which total ordering cost is equal to total carrying cost will also be the point at which the sum total of these two costs is the least. Using that, we derive the formula for EOQ, and that is root over 2AO by C. Annual consumption is A, O is ordering cost, C is carrying cost per unit per annum. Is that clear, guys? Now, after EOQ as such, guys, we have done the concept of maximum level. I know notes mein pehle maximum level kare beta, but revision mein, because I did ROQ, I'm doing EOQ. We did maximum level, minimum level. Minimum level is the level of inventory that you will have just before you receive an order. Maximum level is the level of inventory that you will have as such, guys, after an order is received. So to arrive at minimum level, from reorder level, you should deduct whatever is you have consumed during the lead time. Yahan pe beta, we do not consider the worst possible scenario, we do it on a normal basis. That is why minimum level is reorder level minus normal lead time into normal consumption. Maximum level ke liye beta, you consider as consumption on a minimum basis. This is to get the highest possible answer. So maximum level as such, guys, will be reorder level minus minimum lead time into minimum consumption plus the amount of ROQ. Alright. And then beta average level, this is nothing but average inventory. So to do this, you will either write minimum level plus maximum level by 2 or minimum level plus half of ROQ. What will result in a better answer? Minimum level plus half of ROQ. That is also safety stock plus half of ROQ. Minimum level plus maximum level by 2 generally may not result in the correct amount of average inventory level, guys, because Minimum level and maximum level are both based on two different assumptions. For minimum level, we take normal lead time consumption, and for maximum level, we take minimum consumption. That is why, as such, guys, you preferably use minimum level plus half of ROQ. But I also told you guys, when you're comparing total alternatives as such, guys, cost at different alternatives, carrying cost is incurred on average inventory. Yes or no? Carrying cost is not incurred on the total number of units that were procured during the year. So when you write average inventory as such, guys, you will not take minimum level plus half of ROQ. You will only take half of ROQ. Why are we not taking minimum level? Irrespective of the quantity ordered, you are anyways going to incur carrying cost on minimum level, so that should not affect your decision. That is when the cost statements, we do not include carrying cost on minimum level, we take carrying cost only on half of ROQ. In fact, guys, even to define, as in basically derive the formula for EOQ as such, guys, quantity that we considered as such, guys, for computing carrying cost was only half of quantity ordered. We did not take minimum level into consideration. There was one or two questions. One question, guys, in which we computed carrying cost on minimum level also, because the question specified. Assuming a 5% risk of being out of stock, compute carrying cost bola wo. That means they're asking us to include carrying cost on safety stock as well. Otherwise, we do not include carrying cost on safety stock in the cost statement. Is that clear, guys? Now, the questions might be to determine what is the amount of discount as such, guys, that you should get. Agar discount hi missing hai, kya karoge? Take purchase price as X, recompute the total amount as such, but and equate that to the total cost under EOQ. Do not forget, if carrying cost is given in percentage, a change in purchase price would also result in a change in carrying cost per unit per annum. Total carrying cost in a year, you can simply write half of quantity ordered into carrying cost per unit per annum. Total ordering cost, you will write number of orders multiplied by cost per order. Also, do not forget, irrespective of the quantity ordered, total purchases, guys, should still be based on annual requirement. What if they gave us opening stock and closing stock of materials? You should be arriving at annual purchases by adjusting the total amount of opening and closing stock. There was one question in which they gave opening and closing stock of finished goods, opening and closing stock of raw materials. We first determined what are the total number of units to be produced. Using that, we got consumption. Using consumption, we got purchases. So thereafter, guys, all the computations should be based on purchases. That is the amount of such that you're going to buy. Are we clear about this, guys? If at all they gave us a perishable product as such, guys, what did we learn the other day? याद है कल एक क्वेश्चन किए थे बेटा पेरिशेबल, कल मतलब परसों, हाँ. When you're computing maximum level as such, guys, do not forget to take into consideration what is the quantity of material that you can hold better based on that shelf life. In our question, the shelf life was 10 days as such, guys, so we got a maximum level of only 12,000. So even if you get a higher level as such, better, it should be restricted to 12,000 kgs. In that question, guys, we also learned about computing number of orders. Though you were placing a higher quantity as such, guys, the total number of orders in a year should be based on that 12,000 kgs. Yes or no? Because a part of the quantity that you were buying as such beta was not usable only. Okay, guys. After this, guys, we moved on to the concept of inventory control by danger level, guys. Yeah, we also did danger level under setting quantitative levels. Danger level is the level of inventory as such, guys, at which an order should be placed compulsorily in case orders are not placed at reorder level. But for you to have danger level, there should be prior agreement with the suppliers. They should be willing to supply raw material at shorter lead time. So the formula for danger level beta is lead time for emergency purchases multiplied by normal consumption. Is that clear, kids? Lead time for emergency purchases multiplied by. I also spoke about just in time after this. यहाँ पे था ना, ये पूरे questions है बेटा, questions के आगे. हाँ. Yes, beta. We did the concept of inventory stock out after this, guys. I said stock out situation can arise as such, guys, during the lead time. In case your reorder level as such, guys, is not sufficient, the demand for raw material is more than your reorder level, you may not have sufficient inventories available. So if a situation of stock out occurs, guys, you may either have to lose out on the demand of the end product, or you may have to make last minute purchases. Either of them, beta, is going to result in a cost. So to determine, guys, what is the optimum level of safety stock to be maintained, you will have to see at different safety stock levels what is your carrying cost and what is your stock out cost. The sum total should be least. The sum total of stock out cost and carrying cost on safety stock. Wherever this total as such beta is the least, that itself will be your optimum safety stock level. Is that clear, kids? Then we did the concept of just in time. I said in order. So traditional manufacturing production system is all based on push system. When you say push system, you anticipate demand, you produce based on that anticipated demand better, and then you try to sell the product in the market. But all of this will result in higher amount of inventory levels, and storage of inventory is considered as a waste. It does not add any value to the end customer, guys. It results in storage cost, it results in your finance cost, investment being blocked, and they can also be losses due to obsolescence. So under just in time as such beta, which is a pull system, you manufacture finished product only when the orders are received, so that as soon as the product is manufactured, it will be delivered to the customer. There will not be any storage of the finished product, so no warehouses will be required. Likewise, raw materials will be procured as such, guys, only when they are required. Again, you will not have any storage department. Raw material will be directly delivered to the production department. By doing this, we are totally eliminating inventories, guys. You will not have raw material inventory, you will not have finished goods inventory. Also, guys, just-in-time implementation would mean that you should train your employees to produce the right quality product in the first time. You cannot afford to manufacture defective products. Now you know what is defective. It has to be reworked. Are we clear about this, guys? So I said also talk about the two principles, guys. Produce only when it is required, and also deliver to the customer only when they need it. After this, beta, we moved on to the next inventory control. So abhi tak jo bhi baat kiye beta, that was inventory control on the basis of quantitative levels. Let me just finish the revision beta. I'll take care of you students. So after that as such, guys, you have inventory control, guys, on the basis of relative classification. Under this, there were four things beta: ABC, FSN, VED, and HML. ABC analysis is the branch of Pareto analysis. I spoke about Wilfredo Pareto beta, the 80-20 rule. So if you apply that 80-20 rule in terms of inventories as such, guys, you will be able to divide the inventories into three categories. Category A beta is generally those items that are 10% in volume or number but 70% in value. So because they are important and they involve a considerable amount of investment as such, guys, there should be strict inventory controls placed over category A items. It is category A for which you will have reorder level, maximum level, minimum level, and all the other inventory levels fixed. You will not want to maintain excess stocks of category A. At the same time, you should not be maintaining less stocks also. Highest amount of controls will be for category A. Category B beta is 20% value, 20% volume or number. How will you be placing orders for category B? Review them periodically as such, guys. Category C as such beta is 70% volume but only 10% value. Because the amount of investment involved as such beta is considerably lower as such, guys, you directly place orders for them once in every 6 months or a year by reviewing the existing stocks. Are we clear? The next categorization beta under this was FSN analysis. Fast moving, slow moving, and non-moving. Now, based on the usage of raw materials, guys, we'll be dividing the raw materials into fast, slow, and non-moving. Materials that are regularly used as such, guys, should be classified as fast moving. So in order to ensure that you have sufficient quantities of these materials available as such beta, again, higher controls will be placed on fast moving. They will be stored near the store issue point to reduce the time that is required for issue of materials. Slow moving of materials are not regularly used. You will have to review their stocks periodically better and ensure that they do not become non-moving. Utilize them before only or dispose them off. Non-moving materials are no longer required and hence they will be held for disposal. Your objective will be to free up the investment. Then beta, we did vital, essential, and desirable, VED. Vital materials are those materials non-availability of which beta will result in production stoppages. Essential items are those as such, guys, whose non-availability as such beta will result in loss of efficiency. Production will still continue beta, but then it will not be at 100% efficiency. 100% efficiency kabhi aati nahi. But anyways, see, you will learn better. There's something called as overall equipment effectiveness, OEE. There's a concept. Machines beta can never operate at 100% efficiency. 80 to 90% majority companies will do it. 90 to 95% is great. Amazing. Next level bolte. So anyways beta, so essential are those as such, guys, whose non-availability will result in loss of efficiency. Desirable items as such, guys, no loss of production, no loss of efficiency also. Is that clear? समझ में आ रहा है नहीं आ रहा है बेटा? हाँ. Yes, if you have questioning seats available in the classroom as such beta, they'll be considered as desirable items. They're not going to affect the productivity or efficiency. हाँ या ना? The last one as such, guys, is HML beta. sir कर दो. High cost, medium cost and low cost. The classification is same as ABC analysis guys, except that this classification is based on cost per unit and not based on total cost. After this beta, we moved on to the next classification, that is on the basis of ratio analysis. So here we did input output ratio and inventory turnover ratio. Input output ratio talks about the total quantity of raw material that is required guys to manufacture a specific output. Once you have this input output ratio fixed, you will be able to compare what is the actual consumption of raw materials with the standard consumption of materials. Inventory turnover ratio will talk about how many times an inventory is getting replaced in a year. If you maintain higher inventory levels, beta, you will be replacing inventory lesser number of times, and that is why your turnover ratio would be less. If you maintain lesser amount of inventories, your turnover ratio would be very high. Toyota has an inventory turnover ratio of 120, 130 also for their vital items. For smaller items, such guys have 365 also. That means inventory gets replaced every day. So guys, inventory turnover ratio as such beta will be equal to annual consumption of raw material. It is consumption of raw material divided by average stock of raw material. We are not doing it for finished goods. We are not doing it for work in progress. We are doing it for raw materials. That is why it is annual consumption of raw material divided by average stock of raw material. COGS divided by average stock is for finished goods, not for raw material. Are we clear? Inventory holding period beta will be 365 days divided by inventory turnover ratio. This will tell us for how many days beta is the inventory being stored before being utilized. Higher the inventory holding period, higher will be the cost also. Lesser the inventory holding period, lesser will be the cost. After this beta, we spoke about physical control. Under physical control beta, there was 2-bin system. So before this beta, store records mein we did bin card, we did stores ledger card and stock control card. Bin card as such guys is a card that is placed on the container in which the materials are stored. It will have name of the material, code of the material, total quantity of material, receipts, issues, everything. Every time a transaction occurs, you're receiving material, you're issuing material beta, entry will be made on bin card. Stock control card as such guys is a centralized registry that is maintained by stores department for all the materials. Stores ledger card is maintained by the accounts department. It will have all the information that is there on a bin card. Apart from that, they will also have value of the material. Because it is for accounting purpose beta, they'll obviously write cost per unit. Stores wala cost per unit nahi likhega beta. It is the accounts department that is going to maintain all the details of cost. Are we clear guys? Now under physical control beta, we have 2-bin system. 2-bin system you have 2 containers guys for a material. There's a larger container and then there's a smaller container. The smaller container as such guys, quantity is usually equal to ROL. Textbook ke hisab se it can be safety stock or ROL, but preferably ROL guys. So the minute the larger container is exhausted as such guys, you would know that you have to place a order. Then beta I spoke about establishment of budgets. If you have budgets in place as such guys, you will know what is the expected production during the year and what is the expected requirement of raw materials, so that procurement can be done guys based on that estimated requirement only. Isn't that also a way of exercising control? You already have budgets approved beta by the management, so you know whatever is being procured is within those budgets. Then beta we spoke about perpetual and periodical inventory system. Under periodical inventory system as such guys, once in a while as such beta, physical inventories are counted as such guys, and then you will know what is the total amount of materials consumed. In reality as such guys, entries regarding issues as such beta would be receipts or issues would be made as such guys periodically once in every under periodical inventory system. Perpetual inventory system mein beta entries would be made on a continuous basis as and when the transaction takes place. Continuous stock taking as such guys, stock taking का मतलब होता है physical verification. Under continuous stock taking, you're physically verifying the inventories as such guys on a continuous basis. When you say continuous, few items will be verified on a daily basis so that over a larger period you cover all the items. Is that clear guys? So after this beta we moved on to material. पहले issue procedure करा. So after this as such guys we moved on to material issue procedure. Under material issue procedure guys, we've already learned the first thing is material requisition note. There will be transfer of material as such guys, and then there will be return of material. The same thing comes under consumption of material also guys. इसलिए मैं बोला ज़रूरत नहीं थी क्योंकि that is already learned. So material requisition note as such beta will help us in identifying as such guys against which product is the material being used. In case there are excess stocks lying with the production department, they're going to return it to the stores department, for which you will prepare a material return note, also known as a shop credit note or a store debit note. Production shop credit note, store debit note. Store is the receiving one, you're going to debit them. Production shop is the giver, you're going to credit them. And then guys, if in case the materials are transferred as such guys between 2 different departments, you're going to prepare a material transfer note. After that beta we spoke about valuation of material issued. अभी तक ये मालूम पड़ गया कि what is the cost at which the materials are going to get recorded. You prepare stores ledger card. You should also know what is the price at which the materials will be issued. So for this I said guys, not necessary as such beta that all the purchases should be made at a fixed price. Purchases occur on a continuous basis. The price at which the materials are procured as such guys will continuously change. So to know what is the cost of materials consumed as such guys for a specific product, you need a method of accounting. This is where as such guys, based on cost methods, we have specific identification method, FIFO method, LIFO method, average price method, base stock method. Under specific identification method guys, you know what is the cost of materials consumed because the materials have been purchased as such guys for a specific requirement only. The materials are not interchangeable. जो भी तुम लोग material खरीदे, that will be used only for a specific product. Usually done better when you undertake customization orders. If the materials are interchangeable as such guys, this is where you will either use FIFO method, LIFO method or weighted average method. Under FIFO method, whatever is purchased first is assumed to be consumed first. Under LIFO method guys, whatever has been purchased recently is assumed to be consumed first. Under weighted average method guys, you're going to arrive at an average price of all the purchase. मतलब जो भी balance quantity, every time you purchase as such guys, you're supposed to recompute weighted average price. ठीक है, we follow perpetual inventory only यहाँ पे as such guys. अगर यहाँ पे periodical inventory होता ना as such guys, then average price will be computed based on all the purchases at once. ये question you will see but in accounting standard 2. We did a question based on periodical inventory system. तो यहाँ पे नहीं है. Under costing guys, you do not have it. By default it is perpetual inventory system. That means weighted average price will be computed every time a purchase is made. Base stock method में as such guys, there is a safety stock that is maintained and that will be maintained at a fixed price. All the subsequent purchases and issues के लिए such guys, you can follow FIFO, LIFO or weighted average method. Then I also said guys, under methods for valuation, if it is for decision making guys, that is market price method, we have replacement cost and realizable value. Replacement cost, realizable value, both of them come into picture when you have existing stocks of material. So, and you need it for a new order. So if this existing stock of materials are something that are in regular use and you want to consume them for a new order as such guys, then you will anyways have to purchase fresh quantities from the market. That is what will be relevant for decision making, replacement cost. If this existing stocks of materials are not in regular use, you know better that in case you do not take up the new order, anyways you're going to sell them in the market. So your opportunity cost beta will be realizable value. After that beta we spoke about notional price method. Under this we have standard cost, inflated price and reuse price. Standard, in case an organization follows standard costing guys, then the materials will be recorded at standard cost irrespective of the actual cost incurred. Inflated price comes when there is normal loss beta, so the cost of this normal loss will be adjusted to the cost of the remaining good units. And reuse price method comes guys when there is a effective, so obviously it will not be costed at a regular price, you will consider a lower price. After this guys, what did we do? We prepared stores ledger card. Then we did different types of material losses. Under different types of material losses beta, we had waste. I said waste is basically the quantity of material that is either lost as such guys during storage or during the production process, may be visible or invisible but does not have any value. Scrap arises on account of the manufacturing process, specifically in case of materials as such beta that require metal components. So those trimming of the products as such guys will be recycled. When you say will be recycled, you're going to dispose them off, you're going to sell it. Spoilage as such guys refers to either material or finished product as such guys that cannot be rectified and hence will be discarded. Defectives as such guys can be reused, can be reworked. In all of these cases, I said if it is normal loss, it will be adjusted to the cost of the remaining good units, and if it is abnormal loss as such guys, it should be transferred to P&L account. Defectives mein rework cost aayega, whatever cost that you're incurring on rework will be added in the total cost. It will forming part of your cost of production. Obsolescence comes better when the material becomes obsolete. It is no longer required. That comes only when there's a change in technology, when there's a change in market demand. That is why you no longer need the material. उसके बाद में data we did consumption of materials. I said you just have to code the raw materials, code the finished product as such guys, and after that same material requisition note, material transfer note, and then beta there is material return note, shop credit or store debit note. Are we clear guys? Yes beta, correct है. हाँ, बार बार question मत करो. Are we clear beta? So that's the end of revision of materials guys.